up on the missing one. Okay, so I've started recording so that we can actually start the discussion. And I'm just going to go through the review for the last lesson we did, which was paperwork, which was unit 4. You remember we talked about the goose. You still remember the story of the goose?
Yes, please.
Oh, okay. Prosper, you remember that? Do you still remember the story of the goose?
Yeah, I can remember.
Oh, okay. So you can you see my screen now?
Yes.
Oh yes.
All right. So that's what I'm just going to review that. So these are the things that we discussed about the last time we met. We talked about how important it is to separate business and personal money. That all the money should not be put in one thing. We need to make sure that our business money is kept separate from our personal money. And we talked about the dangers of keeping that money in one place, because you end up using the business money for your personal use. So it's always advisable to separate this. And we said when you're running a business, you need to pay yourself either a salary or a commission. And we talked about what a salary is. We said that a salary is a fixed cost that you have to pay. If someone is working for you, and if you're paying them a salary, you must pay that salary, whether your business makes profit or not. So salary is a fixed cost, and that's why it differs from a commission. A commission is a percentage of your profits that you pay yourself. When your business does well, you pay yourself a commission, and if the business does not do well, then you might forego giving yourself a commission. And we also mentioned that you should not steal from a business. By stealing from a business, we say that when you take things from a business without paying for those things, then you are stealing from a business. And oftentimes we do that. We just take things because we consider the business our own business, and we take things without paying for them. So we were stealing. And we also mentioned the importance of saving regularly. And the last thing we said is you should make and follow a personal budget. Have you tried to make your own personal budget, Jennifer? Jennifer?
Hello, sir.
Yes, I'm asking, did you try to make your own personal budget?
I can't hear you.
Sorry. I'm saying, did you try to make your own personal budget?
Yes, please, I did.
Okay. Prosper, can you hear me?
But it wasn't actual. It wasn't actual. And then
yes,
it was,
yes.
I don't know how to put it. I guess,
Don't worry about
let me just put that. Yes, I've done it.
Yes, so don't worry about feeling the actual. Just focus.
Yeah, I wasn't able to prepare it.
Oh, so what I want you to do is I want you to try and just come up with a rough figure that you consider either a salary or a commission, that you say that I've made this, how much. This is only for planning. I just want you to feel the planning part of it. Then you try and actually come up with your personal budget. And what is very important is that your personal budget, your income and your total income and your total expense should tally. It should not be more or less. It should just tally. So once you have done that, you've actually made your personal budget very well. So that's what I'm talking. That's what I'm saying, that we need to learn to create our own personal budget. So today we are going to talk about Unit 5. Unit 5, it talks about paperwork. I said that we talked about paperwork as a home budget, but we're going to talk about paperwork in terms of our businesses. So the first thing we're going to look at is the importance of keeping records. So in business, it's very, very important to keep records of everything that goes on. Even if you pay somebody, if you pay somebody money, you need to write it down and keep a record of that. Okay. So everything that goes on, especially for your business, there has to be a record to show that this is what happened in the business. And we also talked about recording income and expense at the point of sale. So these are some of the issues, the principles that we are going to discuss today. And we are going to learn about how to make an income and expense log. And also we are going to learn on how to create an income statement. And this is what we always advise people, that you need to avoid selling on credit. Okay, so there is a danger in selling on credit, and we are going to look at that also. Okay, so this is what we discussed last time, the commitments that you took with you. One of the commitments was that you will separate your personal and business money, and you will also keep your personal, you keep your personal and business money in separate places. And this was emphasized by Dean Curtis, who is the co-founder of Interweave Solution. And the other commitment, I do not steal from my cash or inventory from my business. Okay, so you are not going to steal from your cash or inventory from your business. You need to commit yourself to do those things. And in your business, you need to either pay yourself a commission or salary from the profit that you make. So if you don't make a profit and you have committed to pay yourself a salary, then you still have to pay yourself. But if you commit yourself to pay yourself a commission, then you can either pay yourself or you might decide to pay, not to pay yourself. Okay, so in the picture there, I don't know if you can see that small boat there. Can you see that small boat? Let me try to show you the larger one, the bigger one. Okay, do we see the boat here? Japheth? Japheth, welcome.
Thank
you. Okay, do you see the boat? Do you see the boat on the picture? Prosper? Prosper, can you see the boat on the picture?
Yeah, yeah.
Okay.
Yes, I can see.
What do you think about this boat? If I'm to ask you to take this boat and use it, would you take the boat and use it? Prosper. Will you be comfortable using this boat? I don't know if you can hear me.
Yeah, it's affordable to use. My place is a bit noisy now, so.
All right. Okay. So our business is more or less like the boat that you are seeing in the picture there. Okay. So your business, you should be comfortable to do certain things with your business because you know that your business will not be affected. Okay. So if you look closely at this boat, it looks very old. And it looks like it might have some kind of holes on it. And that would mean that if you maybe try to go or to maybe go for a swim with it, there is a high chance that it might sink and you might probably lose your life. So this boat is more like our business. If you want this boat to look nice, And to be safe for us, we need to make sure that we repair this kind of a boat. Okay, we might need to use the new materials and all those kind of stuff so that it becomes usable. As it is right now, it's a very high risk to use this kind of a boat. Okay, so in business, you need to understand the type of business that you have and the status of your business. Okay, it says here, the board is like your business. You need to know some things about the boat and your business to make sure they will float before you take them into the deep water. Okay, so there are some risks or some things that we do to our businesses, just like taking this boat into the deep water. Okay, so it says like that, just like the boat, you need to know some things about your business before you invest money, take out a loan or create a loan, a lot of fixed costs. Paperwork provides tools you can use to make sure your business will float. So there are certain things that you might need to do in your business, like getting a loan, like investing into it. Okay. But for you to be able to invest into a business, you need to know its status. If the business is not giving you money, it's not making any kind of money for you, it's pointless for you to invest in such kind of a business. But if you see that your business is doing very well, but it's only suffering because it does not have enough capital to go forward, then you might consider injecting some money into it. For example, we're going to look at how a loan. Who can tell me what is a loan? Who can just share with us what is a loan? Yes, Japhet. What's your understanding
Yes,
of?
a loan in my basic simple understanding is a money you go for in advance to undertake an activity with the hope of paying back with possibly an interest. And the loan could be from a colleague, a family member, or a financial institution that you take with some interest that it comes with.
Sure. So a loan, you might say that a loan might be paid after a certain period of time, but one thing to understand about a loan is that it must be paid back. So the moment you use the word loan, it means that it's not money that you get for free. It's money that you are supposed to pay back. So once you get a loan and you inject it into your business, but your business is not making any kind of money for you or not any profits for you. That means you are going to have challenges to pay back the loan. Okay. So there are different kinds of loans that we can talk about. There is what is considered a soft loan that you might get from your family or your friends. You might borrow maybe 500 and you pay back 500. But like what you said, Japhet, usually when you get a loan from a financial institution, it has a percentage interest on it. That means if you borrow 500, you are not going to pay 500. We're going to pay with an interest. Okay. So if your business is not doing very well, you are not going to be able to pay the loan. And you are going to suffer if you don't pay the loan. You might lose your property because you failed to pay the loan. So the first thing we are going to discuss is keeping the records. Who wants to read for us this short story between Daniel and Max? Zifa, if you can be Max, and Japhet, you can be Daniel. Hello?
Yes, sir. We can hear you.
Okay.
Hello?
Yes, can you be Max Differ? Then Japhet can,
Yeah.
can you just read the part where it says Max?
Okay.
Okay. So I'm Max, right?
Yes, yes.
Daniel, I need to pay for the job I did last week.
I am sure I paid you.
The other guy I work for writes everything down. Do you have any record to show you paid me?
No.
Okay, and then Prosper can be James, eh? Prosper, can you read James' part? Okay, let me read James. It seems like Prosper is having challenges there. So I'm going to read James' part. Then Daniel, you continue as Daniel. Okay. So Japhet, you continue as Daniel. Okay. James says, good to see you, Daniel. You look busy. Have you made any profit?
Yes, I think so.
You think so? What do you mean?
Well, I haven't kept any record. I am busy making furniture.
You don't write down your expenses or income to calculate profit and loss.
James, I am a carpenter, not an accountant.
Daniel, going forward, you must keep records of everything so you will know if your business is successful or not. So what do we learn from this short story here? What do we learn about Daniel?
Yes, I think Daniel was into a business that was doing well for him. But
Yes.
the unfortunate thing is that for him, he never kept records of what was going on. So he was just working and the money were coming. And I think he was just using it anyhow, not having records of how he's doing.
Thank you so much. So if you look at the first incident where he was talking to Daniel, he was talking to Max. Max, he said that he wanted to be paid for the job he did last week. And Daniel, he thought he had actually paid. He paid Max. But Max said that the other guy he worked with, he used to write everything down. And this is very important, even legally. If you go to court and you say that you have paid me money for something I did, they will ask you if there is any kind of a receipt to show that you paid me something. So when you are doing business with anyone, you need to write things down. If I come and ask you for money that I need to do something, you need to write it somewhere and you ask me to sign. Okay, it might not be something that is maybe professional, but you can actually write in a book and you ask me to sign down to show that you have given me an amount and I signed for it. Because if you don't do that, then I can come back and say you owe me some money. And you would say that I gave you. And it's only your word against mine. Then in most cases in the courts, you are going to lose and you lose money because of that. So what is very important is that when you're doing business, make sure that you record everything that goes on in your business. And that way it actually helps you to make sure that you don't run into problems with your clients or even your employees, okay? So the other thing is you need to learn to record income and expenses at the point of sale. When I'm saying at the point of sale, when a customer comes to you and says he wants some candy or some sweets from you, Then there and then you need to record that a customer has bought this. Okay. You find that there are so many ways of recording things. Okay. If you look at the big shops, the way they do it, they use a computerized system. Like most shops these days, they use a scanning machine. That scanning machine will have everything recorded in the system. So when they scan something, it actually subtracts what you have actually bought. So that's why you'll find when they give you a receipt, it has got a detail. If you have bought bread, if you have bought milk, it's written milk. And even the brand of that milk is also written. Because what they do is that there is the receiving part. When they receive those products, they put them into the system. Okay, so when they are receiving, they put things into the system. And when you are buying, they remove things out of the system. So at the end of the day, when they do what they call stock checks, they can know what was bought and what was left. So they do stock checks to check and see if these things, they balance. What was received and what was bought and what is still in the shop. Make sure that those things, they balance. And if they don't balance, then there has to be an explanation why those things are not balancing. And in most cases, they call those things variance. So it can be a positive variance, which means it's showing more stuff than what was received. Or it can be a negative variance, which means that shows that there is less than what was supposed to be in the system. So in most cases, a positive variance is dangerous for a shop, for a business, because a positive variance shows that something was not done properly. It's either something was not captured when it was received. Okay, so that's for most of the shops or for most of the businesses, creates a lot of problem when there is a positive variance. But if it is a negative variance, they can understand, because there are issues like maybe things could have been stolen or things could have broken in the shop and things like that. So negative variance is as understandable, but there is a requirement of that negative variance. If it's too much, then it becomes a problem. And oftentimes it's very difficult for us to remember things just off our head. So if you are working in a shop where there's different kind of products that you are selling, for example, if you look in the picture, there's water, there's a lot of things that are being sold there. And when customers come, it's difficult for you to tell which customer bought what and which product was being bought, because oftentimes you're focusing on the money. So what we normally encourage people is you can have a book. If you are still small, you can have a book where you write your things, your items in the book. Whenever you receive them, you register them into the book. And when people are buying those stuff, you also subtract, or you can just make categories where you say how much was bought, so that you remove those things from the system. Because oftentimes, if you want to do this at the end of the day, your memory will not actually help you. You would have forgotten a lot of things. Okay. So you need to record things at the point of sale. So even if you buy something for the shop, for your business, you need to record it. Excuse me. So when you buy something, you record it. When customers come and buy something, you also record it. Okay. So it says that if you don't do that, you are going to run into a problem which we don't know which of the products is being bought and which one is not being bought. So you might end up just stocking a product that is not favorable to the customers. What you need to find is that which of my products are on high demand. And once you find which product is on high demand, so you need to increase that kind of a product into your business, because you know that more customers will come and buy that. Okay. So this is how you make an income and expense log. When something comes up, I'm going to show you an example of an income and expense log. But these are the benefits of having an income and expense log. Okay. It helps you to know what cash is available in your business. It also helps you to know what and when expenses and incomes occur each and every month. So you can tell which days of the month I have so many customers. Okay, because you are recording those things down. And if you don't record those things, you don't even know which days do you have high customers coming into your business. So, but if you record, then you can even know that, probably there's no need for me to open on Sundays because I don't have customers on Sunday. So the next thing is knowing who you have paid or from whom you have received money. So even if you get money from someone, you record it. So number 4 is that knowing which of your products sell best and when they sell best. And number 5, knowing all your expenses and which ones you can reduce. Number 6, knowing all of the information you will need to prepare your income statement and business budget. So below, we're going to learn about cow. Cow has got a tree trimming business. And I want us to look at this. I'm going to give you just a few seconds to look at cow's trimming business. And I'm going to ask you what you have seen and maybe probably what you have learned from this. So this is how income and expense log is actually written. So I'm going to give you about 30 seconds just to have a look at it. And once you look at it and you tell me what you have learned, and from what you have learned, what can you share with all of us? So I'm going to give you 30 seconds just now, starting from now. All right. So who wants to share with us what they have seen from cow's trimming business? What have you noticed? We're going to discuss it, but I want to see what you have noticed from this cow's trimming business. Okay, Zifa, do you want to say something? Do you notice anything interesting? Prosper. Anything you want to say, Prosper? Okay, Jafet. Yes, Jafet.
Yeah, please, did you call me?
Yes, I'm saying, did you
Okay.
see this diagram on
Yes,
the screen? Yes.
I realized that in a car street trimming business, he has a record of his balance, his income and expenditure, and then the balance he's having. He
Thank you.
also has record of the amount he used to start. So every income he gets, he records it as an add up to his initial startup, and every expenditure he makes, he deducts.
Thank you so much.
And so you realize that he's keeping records of everything, and then he also has the date, which day and which expenditure did he make, or which gain did he, payment did he get. So he's keeping records of everything.
Thank you so much, Jafet. So if you look at Carl's trimming business, tree trimming business, so he's into business of tree trimming. So this is how you write your income and expense log. So once you write, you just write Jafet car washing business. So that's your business. And once you do that, you need to tell us this is the income and expense log for which month. So normally this is done on a monthly basis. You can also do it on a weekly basis, but you can do it on a weekly basis or on a daily basis, but you need to do it on a monthly basis so that you know from the 1st of March, so this is an example of cows business, from the 1st of March to the 31st of March. So you don't have to worry about the year. You just have to write the month and the days 1 to 31 or 1 to 30 or whichever way you want to, where the month, whichever date the month ends. So you start writing by writing your cash, you call it starting cash balance. So in the case of cow, his starting cash balance is 1,500. Okay. So then you tell us the date of when these things were taking place and the description of what was happening. So you describe exactly what was going on. Then you also write in expense. Okay. Then you write an income. Then you also write a balance at the far right of your sheet. So the first thing, if you look at Carl's business, he started the month of March with 1,500. And on the 2nd of March, he went and he trimmed Ralph Jones' tree. Okay, so he trimmed Ralph Jones' tree and he got paid. How much did he get paid? How much did he get from trimming?
200.
200. That's very
200.
Yes. So he got 200. And you add that 200 from the starting cash balance, which was 1,500. So he now has 1,700. Okay. So this is how you record your income and expense law. And on the 10th of March, he did a truck repair. He repaired his truck. And when you repair a truck, you are going to lose money. So this is an expense.
Yeah.
So he lost $100 for repairing his truck. So you remove that $100 from the 1,700 he had now. So it's 1,700 minus 100. And this is what is also important. You need to use these signs, the positive and negative signs, to show that this is an addition and this is the subtraction of my money. And we also learned that on the 16th, he pays McGill wage. And he gave McGill 500. And that 500 means that 1,600 minus 500 was now left to 1,100. And on the 19th, he trimmed Pablo Ortega's tree. And he was given $400. So his money from 1,100, it went to 1,500. And on the 22nd, he also trimmed Brown's orchard. So this was a big job that he got. And he got 1,000. So from 1,500, he was now with 2,500. And he decided to buy the chainsaw from a supply store. So he bought a chainsaw, and the chainsaw, he was actually losing money to go and buy that chainsaw. So he used 1,500. And from 2,500 that he had, he then had to lose 1,500. So he was left 1,000. And on the 30th, he removed a swamp. It was a wild swamp that he removed, and he was paid 400. So he ended up with 1,400. So this is how you write it. Okay, so you tell us that 1,400, then you also write ending cash balance. So you don't have to calculate the ending cash balance because you would have calculated it already. So as you can see, this 1,400 that he ended up with is the same amount that he took and wrote as his ending cash balance. So that's how you write your income and expense law. And these are just the descriptions of what you see on that income and expense law. So the first thing you see is the date Carl received or spent the money. So when you receive or spend the money, you tell us the date. So you write that in your income and expense law. So whenever you do something happens that brings money to your business, you write it. So, and whenever something goes out, you also write it. I've had students asking me that they are running a poultry project. And what happens when a chicken dies? You don't put that in this income and expense law. This is only about money. If you see income and expense log is only dealing with the money that comes in. We are saying that you have got a safe that you keep money into your safe. So we are saying whenever you put money into that safe, you need to record why you are putting it. And whenever you take money out of it, you need to also record why you are taking the money out of the safe. So this has got nothing to do with what happens externally. For example, what I give you an example, like you're actually into a poultry business where you're rearing chickens. If a chicken dies, this has got nothing to do with the money that is in your safe. You don't record it in your income and expense log. You then have to record it somewhere else. Okay. You need to have other books that you can record these things. We are only focusing more on the money that is coming in than the money that is going out. This is important. Why? Because what is going to determine whether your business is progressing or it's not is the money that is in the business. It's not the stock that is in the business, but it's the money that is in the business. So you also need to describe how Keo and the money, or how he paid money, or who he paid money to. So if you pay money, you need to tell us who you paid money to. So in the number 3 says expense, this is the amount he spent. Okay, so you need to put a minus sign in front of the money that you have actually spent, the money you've lost, and you need to put a positive sign on the money that you got in. So that's the income. And the balance is the money that is left at any given time. So you can actually know at any given time. I can come to your business and say, Prosper, how much is in your business? Without even opening your safe and counting the money, you can just look at your income and expense log and you can tell me there is this amount of money. And if this money does not tally with what is in the safe, that means it's either someone has stolen your money, because it should tally. You should be able to tell when the money comes in and when the money goes out. Okay, so anyone with a question? Does anyone have a question?
Yes, so
Yes.
thank you for that explanation. I wanted to find out, this is with regards to a business, and we're looking at the expenses and gains you are making as and when the inflows and outflows, if I may put.
Yes.
Now, the question I want to ask is, assuming I'm a business that requires that I travel at a distance to bring my goods in,
Yes.
so do I have to add the transportation cost? Because I don't see those things in that. Because maybe he was traveling, he was eating, he was buying just for energy and those things. I don't see those things as part of the expenditure law.
Thank you so much.
Do we factor that one in or we don't? Yeah.
Yes, thank you. Thank you very much for that beautiful question. Okay, when you use transport, that means you are going to take money from your business. Okay, so you need to factor it in. So you need to describe and say transport. Okay, if you look at the difference here is Carl's trimming business. He is not usually using transport according to what we are seeing here. But let's say you are into business of transporting goods. You need to tell us whenever you take the money out of your safe, you need to tell us what it is. Even if you take the money to use for airtime in your business, you need to record that. So whatever expense that you incur that makes you take the money out of your business or the safe that you have, that has to appear on this income and expense law. Okay. If you are given money by someone which has got nothing to do with your business, that should not appear on your income and expense law. Okay, if somebody comes and gives you money and say, hey, Japhet, here is 100, that is not supposed to appear on your income and expense law. The same applies if somebody comes and you give him your personal money. That is not business money. It should not appear on your income and expense law. On the income and expense law, you only record things to do with your business. Okay, so if you look at the There is nothing. Paul is not even talking about the food that he bought at home or the bills that he paid at home. But if he did that for the business, if he had to pay rent and all that kind of stuff, that's supposed to be recorded. So yeah, to answer you, yes, if you use transport, it is supposed to be recorded in the income and expense law. But what I want us to understand very clearly is that the income and expense law, you record things pertaining to your business. Okay, so if that's why I gave an example that if you keep your money in a safe that is in your business, when you take the money out, you record and tell us why you took the money. And when you put the money in, you also record and tell us why you put the money in. So this is how you record things in the income and expense law. So you don't have to worry about any other issues that are not business related. If there are personal issues, then worry about them as personal issues. Okay. I don't know if I've answered you, Japhet.
Yes, my question is answered. Thank you very much, sir.
Thank you so much. Thank you so much. So from your income and expense law, you need to create what is known as an income statement. Okay. So this is what the statement here is saying. It said, using Chaos income and expense law, we can make an income statement. So an income statement, in your case, okay, let me make this very clear. In your case, your income statement should come from your income and expense law. So if you make an income and expense law, your income statement should come from that. So you don't put different figures in your income and expense law and in your income statement. So if you look at this diagram below here, can you see this?
Yes.
Can you see? Yes. Can you see?
Yes, yes.
Okay. So what you do now to create an income statement, so you see the income statement is a summary of your income and expense law. So when you are now writing an income statement, this is done at the end of the month. And what you do, you now summarize your income and expense law by creating an income statement. Do you see those red arrows there? Do you see the red arrows in the?
Yes.
Yes.
Yes. They show that wherever whenever Paul was actually, whenever he trimmed trees, you put those together. So you just write tree trimming. You are not going to put details of who he did or whatever. You just write tree trimming. And in this case, you are then adding 1,000 plus 400 plus 200, which will give you 1,600. Okay, so that's where he got his money from tree trimming, which was 1,600 for the month. Okay, then the next is he removed some stamps, and the stamp removal costed him $400. Okay, so you then put together the total income. So if you add the total income on your income and expense law, and you also add the total income on your expense law, it should be the same. There should not be any difference. Okay, so if you say here 200 plus 400, that's 600, plus 1,000, that's 1,600, plus 400 gives us 2,000. The same applies here. 1,600 plus 400, it should also give us 2,000. And if the same also with the expenses. Our expenses here to repair his truck and to pay wages and to buy a chainsaw. So you also just write them as they are, but you're no longer going to write the dates and you're not going to tell us the details. Okay, so here we're saying that truck repair, wages McGill, and chainsaw supply. And if you look here, we've got 1,100 plus 500 plus 600. 600 plus 1,500, it should give us 2,100. And that's the same amount that you get here. Okay. So looking at this now, we learn that Carl used more money in the month of March than the money that he got. So what we are saying is that his total income was 2,000 and his total expenses was 2,100. So if you want to find the total, the profit or loss that you make, you say total income minus total expense. Okay. So you remove the total expense from the total income. So if you say 2,000 minus 2,100, you will get minus 100. I don't know if that is clear. Is there any question?
So,
Yes, that is clear. Very clear.
Okay.
so there is a loss here.
Yes, so this is a loss because what you do is if you make more money than you've gained that money that month, that means you have made a profit. But if you make less money than you have gained, that means you've run a loss for that month. So if you look at this here, if Carl is going to run this kind of a business where he's using more money than the money he's getting, that means his business is going to go down. Okay. But in this case, we can say that the chainsaw he bought, the chainsaw he bought was very important for his business because he can actually use it for the next maybe months or years. Okay. So this is a productive asset, which is very important for the business. So there are some times when you really need to buy something like that. But what I'm saying is that you can calculate that how much did he gain and how much did he use. And in this case, for that month, Carl made a loss of 100. I don't know if that is clear.
Okay.
Okay.
Yes.
Yes.
This is how you make your income and expense. And this is how you make your income statement. So you make them, you first of all make your income and expense log. And that shows details of what was happening and the dates of when these things were happening. But now when you're making an income statement, you are summarizing what happened in your income and expense log. So you summarize everything, but the figures here should be the same as here. If we were to put the ending cash balance for Carl here, do you notice that in the income statement, there is no starting cash balance? Did you notice that?
Yes.
Okay.
Yes.
So now if we now take the starting cash balance, which is 1,500 minus 100, then we come back to 1,400 that he got in the income and expense. So do you see that?
Yes.
Okay. So we are saying the income statement does not have starting cash balance, whereas the income and expense log has the starting cash balance. So this is where it differs. This is why you find that in the income and expense log, there is 1,400, that is ending cash balance. But if you look here in the income statement, we don't write the ending cash balance, or we did not write the ending cash balance. But if we are to write ending cash balance, we'll then take this 1,500 and subtract the 100, that loss that he made. Then we'll still have 1,400 in our safe. So this 1,500 is in the safe. It's staying in the safe. And then we calculate what happened during the course of the month. And then we realize that in this month, we made a loss of $100. But this $100 is going to be subtracted from the money that is in the safe. So what is going to be left in the safe is 1,400, which is going to be our ending cash balance. So this is how you get your ending cash balance. Okay. Any questions?
Yes. I wanted to ask a quick one.
Yes.
In preparing the income and income statement, do you have to add the income and expenditure log? Or for example, if I'm the financial secretary of an organization, that at the end of the day, I need to present on the income statement of how far the organization is doing in terms of its finance.
Yes.
Do I have to add or attach the income and expenditure log to it?
Okay. You might need to do that so that they understand where the money, how the money is being spent, or how the money is coming into the business. The reason why we have an income and expense log is it describes in details how the business is going. Where are we getting money and where are we losing money? So you might find that if a big organization, in the description here, there is salaries. We only saw only the salary of wages of McGill, which was only 500. But in some businesses, in some big businesses, this amount can range to millions of dollars. This is then where the CEO of the companies then say, we are losing a lot of money in salaries. So we need to cut down on the staff. This is how they get to see that we are losing a lot of money paying salaries. So they can easily tell using the income and expense log that most of our money is going to the salaries. So it helps them. So you might need to use that to demonstrate how the company is performing or how the business is performing. But then the income statement, even though it has got all the details, it might not have the clearer details. The only difference, if you have noticed, is that the income and expense log gives it describes things in detail, and the income statement, it only summarizes. So what I'm saying is that if you can see in the picture that I've just presented to you right now, these are, you need to try, and also these are examples that you need to try on your own. Okay, so you are going to create your own income and expense log. And from your income and expense log, you are going to create your income statement. Please, I just want us to understand each other here. Your income statement should come from your income and expense log. Okay, so we don't want different figures on the income and expense log and different figures on the income statement. What you have recorded on your income and expense log are the figures that you're going to take and summarize in your income statement. So the figures should not differ. I don't know if I've answered your question, Jeffrey. Jeffrey?
Yes, it's answered, sir.
All right, thank you so much. Thank you for answering.
Yes, I said you've answered.
Okay, thank you so much for asking that question.
It's clear now.
All right. So when you are maybe working for a company and they want you to demonstrate,
thank you.
You might need to use both of them. You might need to use income and expense log, and also then use the income statement and explain this is where we have been losing money, and most of the money was lost during this period of month. And the income statement then will summarize that and say, okay, so this month we've gained this much and we've used this much. So from our income and expenses, we have used more money than we have gained, or we have gained more money than we have used. Okay, so this is one thing also that I always emphasize is avoid selling on credit. Why do you think it's important to avoid selling on credit? Why do you think we say that you should avoid selling on credit? Zifa, can you tell us why we are saying that if you are running a business, avoid selling things on credit?
Hello.
Yes, I can hear you.
Can you hear me, please?
Yes, we can. Go ahead, Zifa.
Yes, you have to avoid selling on credit because, yes, you have to avoid selling on credit because if you are not careful and your creditors has not been able to pay the money, the things that you sold to them on credit, your business will collapse.
Sure. That's very true. So often businesses, they collapse because maybe you have sold your products on credit, and
Hello?
those people are not paying you back their money. And it's very,
Hello?
Yes, I can hear you. We can hear you. And if you look, I was just describing what you have just mentioned. You gave a wonderful answer there. Most of the time, people want to sell things on
Okay,
credit.
go ahead.
Yes, okay. So it says when you give a person your product and they sell, they say they will pay you later, you are selling on credit. And this is dangerous to your business. Okay. So when you come and I say I need your furniture, I'll pay you. Okay. And you give it to me, you are selling on credit. And this is very dangerous for your business. Oftentimes, people have ended up being enemies because somebody doesn't want to pay. And at times, it actually costs you more money to follow your money that you are supposed to pay. So you might have someone borrowing $100 from you, and you might end up using maybe $50, $60 to get that 100 back. So it's always not advisable. Okay. It's not advisable to sell on credit. Okay. So in this case, we've got a few scenarios of people where we can learn about selling on credit. Okay. Says people don't pay you like they promised to. You lose time and money trying to collect the debt they owe you. And the credit is hard to record because no money goes into your cash box. You need to keep a separate record of money you are owed. That record is called accounts receivable. So if you have taken out a loan for your business and then start giving credit without charging interest, then you are losing money. Because when you get a loan, you pay interest. But when somebody comes and borrows your stuff, you don't charge them any kind of interest. So at the end of the day, you are the one who is losing in your business. Okay. Before we close, do you have any questions, Jafet? Jafet? Can you hear me, Jafet?
I don't think I have a question, sir.
Oh, okay. Thank you so much. So this is what I want you to do. I hope the others
Thank you very much, sir.
All right. So I hope the others will get this recording. I'm going to submit the recording on the WhatsApp group. But this is what I want you to go and work on. That you are going to develop a process for your business to record income and expense at the point of sale. So you can actually use the same chart that we have actually demonstrated today, or you can create your own that you can understand better. We are not saying you must use what we have actually demonstrated to you today, but if you feel like there is a way that you can actually record it, I usually use Excel to do these things, and I record them on my laptop, and I keep my records on my laptop. So whichever way you feel will help you to keep your income and expenses.
We have to make money. Okay. Yes. Sure.
Okay. So the next commitment I want you to make is I'll keep an income and expense log for my business. So if you have a business, commit to keep an income and expense log for your business. And at the end of the month, that you are going
don't be working fast.
You are going to create an income statement for your business.
Yes. I came here to do something. You want me to use?
Okay, Javed. So thank you for your time.
Yes,
Javed.
sir.
Okay, thank you so much. So next on Friday, we're going to look at the paperwork. We're going to discuss the business budget, how you can make a business budget. So today we've looked on income and expense log and the income statement. and just keeping records in your business. But on Friday, we're going to look at the business budget. Thank you for your time and thank you for your contributions. I hopefully we'll meet again on Friday, and we can also discuss further on this course. And I hope you're also recording things on in your platform where you signed up. You are supposed to continue to fill in.
Thank you.
Yes, you're supposed to continue to fill in what way you have signed up. Okay, so thank you so much and have a wonderful evening. Oh, I want to come back. All right, so we'll end the class for now. We'll continue on Friday with unit 6. So I'm just going to, okay, Visa, sorry for the interruptions with your internet, but we've come to the end of the class for today. I've recorded,
yes.
I've recorded whatever we've discussed today, and I'm going to submit it on our WhatsApp group. So you can actually go through the recording again after we've finished. So let's meet again on Friday, where we are also going to discuss paperwork, and we're going to discuss how to create a business budget for your business. Okay, so thank you very much, everyone, and everyone.
Thank you very much.
Thank you.
Very interesting. Thank you very much.
Sure. Thank you so much.